Hello and welcome. You're watching Your Trades on ET now with me, Sneha, and with me is Priyanka Uppal. And Priyanka, what a day we've seen in trade. At one point we've breached past that initial record high that the Nifty had set for itself of 25,078 in all of just 18 sessions. It took Nifty to mark a new record high. But at one point we were also comfortably above 25,100, but we seem to have lost those gains as Nifty simmered down to end the day at 25,052. We are still above 25,000, so that's also going to be an important level to watch out for. In fact, going into tomorrow's trading session, Sensex also has lost all the gains because that was also up 0.3% during the course of the day. But as of now, closed the day with very flat gains coming in. You also have Nifty Bank, however, that was bucking the trend. 0.2% lower is where Nifty Bank is closed for the day. But if you take a look at the broader markets, both indices, you have mid cap as well as small cap, have closed the day with nominal cuts but in the red nonetheless. So it was the day of the benchmarks that were outperforming the broader markets today. You had the likes of LTI, Mindtree, Wipro, DV Slab, IndusInd Bank, Infosys, Bharti Airtel, all of these stocks from the Nifty 50 basket that were holding on the Nifty in the green. But when you take a look at the sectoral gainers today belong to Nifty IT because 1.5% gain coming in on that index. At one point that was also higher by almost 2% but simmered down slightly. LTI, Mindtree, LTTS, Wipro on the back of multiple news flows, brokerage notes, all of these stocks were abuzz that led to Nifty IT holding on to strong gains today, followed by Nifty Pharma also did pretty well. However, what did not do well was Nifty Media, PSU Bank, FMCG, Energy, Nifty Bank, Metal, Realty, Auto. All of these counters have ended the day in the red. If you take a look at some of the counters that were abuzz on the back of brokerage notes, you had LTI Mindtree that ended the day with stellar gains coming in because Kotak upgraded that stock to an ad rating and hiked the target price to 6,200 as well. Bernstein also came out on a note on the entire retail space, but one stock that stood out from that space was Trent because Trent also ending the day with gains of 5%. They've set an outperform target with a target price of 6,300. You also have Zydus Life that was in focus today. They've received the US FDA nod for their Parkinson's drug. You also have Jefferies that has upgraded that stock to a buy rating. But other than all of these brokerage stocks also, you had NBCC, that stock did well, up almost 10% on the back of this bonus issue. L&T Tech, Wipro, Indus Towers, Shoppers Stop, all of these stocks were in focus. But Priyanka, what stood out to you?
Absolutely, a lot of action to track today, Snehi, and a lot of action coming on the stocks on the back of the brokerage note. But one thing was very clear, that the money is flowing from banks to IT. That's what you could actually probably conclude by seeing at least today's action. The kind of move we saw from the IT pack, top gainers on the Nifty and even from the mid-cap pack were from IT. The other two spaces which were leading from the front were pharma, real estate space. They were also the top sectoral gainers also. But then the kind of reports that we saw, Bernstein came up with a report on restaurants as well as on retail sector. They've given an outperform rating on Viviani, Jubilant, DMart. But the kind of move we saw in Trent, and that to be multiple reasons here. Trent would be included, its inclusion in Nifty, the kind of numbers and the kind of growth CAGR the company is set to poise what we saw from the last quarter, plus the kind of the traction entire apparel space is right now gaining. That's what one reason where we can see that the trend is actually trending higher. The other stocks which should be talked about is of course IndusInd Bank, top gainer on Nifty after CLSA also rated, outperformed rating, 28% upside. That's what the brokerage saw, and IndusInd Bank was also up 2.5. That's when banks are not performing. This bank was leading today. Other stocks to track, NBCC, it was 10% up today. Some profit booking which we could see in Tata stocks, especially when we saw stocks like Tata Investment, Tata Tech, Tata Tele, and even Tata Elxsi. They were soaring high yesterday, but then some sort of profit booking. Tata Elxsi is also on the note, brokerage note again. Kotak retained a sell rating, target price also they've slashed. That was one reason that it fell, and quite a fall, 9% of fall what we saw on Tata Elxsi. Tata Tele, in fact, Z Entertainment, it comes into a settlement with Sony. We saw the stock surge. In fact, it surged in the first half, at the open also, but then later it started to slip and closed with around about 3.5% of gain. We'll understand more on the levels as well as the personal recommendation when Ruchit also joins in to talk about the index and the levels. But the kind of profit booking we saw on PB FinTech and many more sectors. But then I think we should talk about the good news and the positive sectors, especially IT, pharma. Let's see what is on Ruchit's radar today. Ruchit, good afternoon. Welcome. Tell us, what do you see? Every time we see a new level coming on the index, we think that maybe the index would be in for some consolidation, but then to disappoint the bear, it trades higher.
Yes, hi, very good afternoon to both of you. I think that's what we usually see in an uptrend. The market is trending higher. That has been a strong buying interest. If you look at last 1.5 week, although Nifty has seen a gradual up move, the up moves have been slow, where intraday moves are not that big, but still, led by some of the sector, either metal sometime or IT, or pharma space. Some of the sector keeps supporting the market. So I think that's the typical behavior that we see in an uptrend. I think it's only the banking sector which has seen a long phase of underperformance if you look at last few months activity. But apart from banking and NBFCs, if you look at the broader market participation has been very strong. So I think this trend is likely to continue going ahead because firstly that it's we are not witnessing any kind of negative market breadth. If you just leave 1 or 2 days aside, the overall market breadth has been steady. Secondly, if you look at the derivative segment, FIs and clients, these are the two sections which forms majority positions in the index future segment. Client section has a long short ratio of around 50% if you look at yesterday's data. FIs have long short ratio of about 57%. So none of the market participants are interested in creating fresh short positions. So I think this is also one of the reasons that lack of short formations, because no one is forming much short positions on the index. These big participants that we are talking about, I think because of that also the markets are trending higher. So I think overall trend should remain intact. If we take out retracements of these recent correction which we saw at the start of the August series, then that gives a potential targets of around 25,400 on the Nifty in the for the near term. So there may be some bouts of consolidation, but overall trend remains positive. It's a good opportunity to look for stock specific action with the positive side itself. And on the index, we are expecting Nifty to head higher towards 25,400 soon.
25,400, a big target coming in. Ruchit, from your side for Nifty 50, you're saying that the overall trend remains positive, but it is a stock pickers market. So what is your picks? What are your picks coming in from the entire market? What stocks would you like to pick, and where are you seeing positivity going ahead?
So a couple of recommendations. The first thing that we are looking at, which stocks are showing strength, and which are showing underperformance. So those stocks which are showing underperformance, we are not trying to do any kind of bottom fishing over there, because this is a market where if the stocks are showing outperformance or a good relative strength, then that strength is getting continued. So Bharti Airtel is one stock which fits in that criteria, where we have seen about 1.5 months of consolidation phase, which was just more of a time-wise correction within an uptrend. The stock did not break its any important supports in that consolidation, and now the stock has again resumed its uptrend. So I think Bharti Airtel could continue its momentum. Keeping a stop below 1500, traders can go long for potential targets around 1640. And IEX is another name which is looking quite interesting. The stock has gone through a long corrective phase. If you look at the positional historical data after 2021, the stock went through a long phase of price-wise correction, then even a time-wise corrective phase. But I think since things have started stabilizing now, because this price structure is indicating the higher top, higher bottom formation. Price up moves are getting supported by rising volume, so which is a good sign. So IEX, I think this one stock can do well from a near-term perspective. One can go along with stop below 197 for short-term targets of 212.
All right, so these are the two stock picks which Ruchit has recommended today. Ruchit, thanks very much. Bharti Airtel and IEX, which viewers can eye on. Now, moving on, word from the wise. We did speak to Gautam Shah, and specifically on being asked on IT, he said that 12 to 15% of upside might be in store for the IT index. This is what Gautam, who's the founder and chief strategist for Goldilocks Premium Research, has to say. Exactly what is his rationale to talk about IT space? Let's listen.
I wouldn't be surprised if the IT index appreciates by about 12 to 15% from here. I'm actually batting for ₹1,000 move on TCS, and if that were to happen, it will single-handedly take the IT index and the entire market up. So IT is clearly a favored area. The ratio charts are in good shape. In every bull market, at every point of time, you have to understand risk reward. I don't think this is a good time for bets in the auto space or the capital goods space based on risk reward, because any market correction and some of these names can correct quite a bit. This is the time for newer sectors, and I still feel that metals could be the dark horse candidate for the next 6 to 12 months, followed by NBFCs and banks, and clearly chemicals. So I'm actually looking at newer sectors to play the market rally.
That's the view coming in from Gautam Shah, but let's move on and talk about the entire defense PSU space, because if you remember, these used to be the talk of the town a couple of months ago, but the stellar rally that we've seen in defense PSUs over the past 2 years, it seems to have hit a speed bump, with many names down by 20 to 30% since July. But how does this fare with the historical trend coming in for these defense PSUs? Kunal and Nikunj are joining in with an analysis on that.
So defense PSUs is where everybody is been talking about first this mega, massive, I like to use the word giant bull run, and now a subtle correction has kicked in. Now we may optically look at the Nifty and say markets at an all-time high, but trust me, under the surface action in some of the defense PSUs is not all that exciting if you really look from the recent high. So Kunal, what is the data indicating?
So it's interesting, Nikunj, because the setup for defense stocks, we know, of course, over the last 2 years, how these stocks have performed as an overall basket. So we've broken this up into two parts: the large cap defense names, the more prominent ones, HAL, BAL, and the mid cap ones likes of Mascot, Dog, GRSE, etc. Now the two bunch of data indicates that the recent correction for the likes of HAL, BAL is almost to the tune of 17% to 15% broadly, which means 15% more or less for the larger cap names from the July highs towards the current closing price for yesterday for these stocks. But the mid cap end of the defense stocks, they've corrected by a margin of 30 to 35% broadly, which means that the pain in the large cap stocks is much less as compared to the pain in the mid cap stocks. Not just this, what we have done is over the last 4 years, from 2020, we've assessed that when were the major periods of correction for these stocks. An interesting set of data points indicates that the likes of, for example, BEL, Cochin Shipyard, Mascot, Dog, all of these stocks, they have corrected below their averages so far. So for example, if the average correction for large cap stocks was around 20% to 25%, the likes of HL and BL, they've corrected 15% to 17% broadly, which means there could be a residual correction of another 10%, even if you go by the previous averages corrections for the stocks within the defense pack.
So the stocks which have fallen less, for example, HAL and the other large ones, what are the chances that they could fall much more and this could be an average 30% correction?
Exactly. So even if you assume that it's a more or less a very similar correction in the last 4 years, these stocks, they would probably fall by another 5% to 10% before we find a major bottom for themselves or a mean reversion which has gone into the historical terms for these stocks. The mid-cap end of the defense stocks, the likes of GRSE, Mascot, Cochin Shipyard, etc., these stocks have corrected slightly above their averages or the previous last 4 corrections for themselves. So if their previous corrections were 32%, 35%, these stocks have corrected by 37% to 40% as well. So which means what could now happen is that rather than a straight fall for the entire defense stocks, you might probably see the defense stocks getting into a more fragmented sell-off. Only few large cap names, they could probably continue one more leg of correction. The mid cap correction could halt, they could go into a zone of a pause. But as an overall basket, if you look at this over the next 1 to 3 months, there could be an overall residual correction of another 5% to 7% in the entire defense sector.
Okay, so mid cap defense, don't go short, don't sell if you own them. Large cap defense, the big ones,
correct,
like HL would be a big one, BEL would be a big one. A 5 to 10% correction cannot be ruled out.
Correct, absolutely.
Okay. All right, so that's fantastic data that where the defense stocks are headed in the near term.
Okay, so we cannot paint the entire sector with the red color. You have to be selective. We'll stay for a short break here. More to come on the other side of the break. Don't go anywhere. Welcome back. You're watching Your Trades on ET now, and now let's talk about the derivatives action. What we saw, at least the kind of call writing has shown, and the kind of traction what we saw in the FNO segment looks like it's a mild, long built-up trend on Nifty. Bank Nifty, however, there's a short built-up. VIX was 13.9. The calls which are active, which could probably take the index to higher levels, are 25,200 calls were also bought into. The active puts, so that it gets, which lends support to the index, is also nearly 24,900. So this level gives the cushion 24,900, 25,000. There also a good put writing action was seen. So we've closely we've taken baby steps, but we've inched higher.
Okay, so well, let's take a look at one of the top buzzers in today's trade also, and that was Trent from the retail space. It's once again on a tear with the stock up over 30% in just a month. Another fresh record high coming in for that stock as well, and about a 3.5% increase in a year only. Now, there's an upbeat growth outlook, Nifty 50 inclusion, and expansion plans. These are some of the triggers driving this rally. But can this rally and can this run sustain going ahead? Jinay has all the data to tell us if that can happen. Jinay.
Well, as Trent's definitely in focus. I mean, the stock has given a 55% return in last 3 months itself. Let's look at what's fueling in this growth and the surge with some key triggers. The first is Bernstein's initiation. Bernstein has given an actual outperform rating for the stock with a target price of rupees 8,100. What they believe and what they like for the Trent is their best-in-class revenue density as well as the inventory turnover. Now, apart from this, the continued network expansion along with growth, along with store presence growth is what will drive further growth for Trent is what Bernstein believes. Apart from this, Nifty inclusion could be another trigger for the company. Now remember that Trent and BEL will be replacing Divis Labs and LTIMindtree in Nifty 50 from starting September. Now analysts believe that this could result into net flow of about $472 million net inflow in Trent alone itself. Apart from the strong results were also a good trigger for the company. If you look at the 5-year CAGR of revenue growth for Trent, it has been growing at a CAGR of 36%, and also if you compare it with peers, Trent is actually one of the most profitable Indian apparel retailer in the country with an EBITDA margins of about 15%. We also have some future looking management commentary where they shared that they will be doing aggressive expansion plan and deepening their store presence across geographies. Also, Star Bazaar will lead their key growth driver in future as well. Now, apart from this, let's look at valuations and consensus rating for Trent. Well, the overall consensus rating remains positive with the buy rating with the target price of 6,666 rupees, which is actually trading lower than about 15% if you compare it current CMP. Also, if you look at valuations, then 12-month forward-looking P stands at about 115 times, which is actually much larger than the historical 2-year PE, which stands at around 98%.
Valuation is also supporting the kind of move we're seeing on the stock. Thanks very much, Jinay, for all that detail and insight on this stock. Moving on, let's talk about Raymond, which is again, of course, it was lower by 2.5%, but multiple news around the stock. We did speak to Amit Agrawal, the group CFO of Raymond, who spoke about the growth and expansion outlook going forward. He's also quite optimistic on the upcoming wedding season for the later half of the year. Let's listen in what exactly he said.
We are quite optimistic about a strong wedding season, and obviously the festivals are going to be very good, because if you see, we have already starting to see the trends from our dealer franchisee network that they're already demanding the product and saying, because the network which I have got spreads over 600 cities, which tells very, very clearly that the demand for our products is going to be very, very strong. In terms of the revenue expansion, which we are seeing, I think there will be a significant faster growth in that, as we plan to open more than 350 stores for the ethnics, dedicated ethnic stores. The wedding space, we clearly see anything between 12 to 14% of growth over the next 4 to 5 years on a year-on-year basis we can achieve in the wedding segment for us. Last year we opened 200 EBOs. We plan to open another 500 to 700 EBOs in the next 3 years.
Right, that's the word coming in from the management of Raymond, but that's all on this edition of Your Trades. But as we bid you goodbye, we leave you with a list of all the stocks that were top buzzers in today's trade, and we have Gaurav to do that. But it's a goodbye from Priyanka and me.
Well, yes, many of the IT counters were buzzing today, and first let's talk about LTIMindtree, because Kotak Securities actually upgraded the rating to add and also hike the target price to 6,200 rupees, because what they believe is that this company is going to be key beneficiary when we talk about recovery in the impacted segment, and that is why the stock increased almost by 6%. Next, let's talk about Tata Elxsi, because Kotak Securities retained its sell rating and a target price of 5,500 rupees, because what they believe is that stock was actually expensive even before the rally that we have seen recently, and there will be challenges in the foreseeable future in the company's portfolio, and as a result we saw the stock went down almost by 5%. Next, let's talk about Wipro, because company is going to expand its collaboration with Dell to bring Dell AI Factory to Wipro's enterprise AI ready platform, and as a result we saw the stock went up almost by 3%. L&T Tech was also buzzing today, and the reason being that company held its analyst day where they gave some guidance for the coming quarters. What they believe is that they are going to aspire to achieve 18 to 20% revenue CAGR in the coming quarters, and they also aim to be among the top 5 pure play ER&D companies globally, and as a result we saw the stock went up almost by 4%. Other than that, let's also watch out for NBCC, because company is going to hold its meeting on August 31st to discuss about the bonus issue of the shares, and as a result we saw the stock went up almost by 10%. And lastly, Shoppers Stop was also in focus because company has now collaborated with Max Factors for brick and mortar present of this brand, and that is the reason we saw the stock went up almost by 3%. So definitely watching out on all these counters on the back of the news flow that we have received today.